Hey guys, James here with Waterford Business Solutions. And as we kind of enter the new year here, wanted to take some time to talk about some big issues that we end up seeing with a lot of clients that come to us for needing cleanup, wanting to work with us in general, or who are just struggling with their numbers being accurate in the first place. And a lot of that falls down to their income. So many clients do not have accurate income on their books and are seeing sometimes a few $100s more, sometimes a few $1,000s more. Some clients are even seeing double the income or triple the income that they should see on their profit and loss statement because they are not properly using QuickBooks and their accounting system as a whole. So we wanted to take a little bit of time to work with you and talk with you about how all of this kind of works and what you need to do to ensure that you aren't doubling and tripling that income there. A lot of that really comes down to the fact that when you are using a third party or an invoicing system, whether you're using House Call Pro, whether you're using Service Titan, anything like that, or even if you're using QuickBooks directly, whenever you're using these third party or these invoicing systems, the minute you send an invoice, that income is recorded. And it's going to show on your P&L. Now it's going to show on an accrual basis, and we're going to do kind of a live example here in just a minute so that you can see exactly how this money moves, and that way it's a little easier to understand. But it's going to show that income immediately. When you receive the payment from these systems, that money is going to sit in your undeposited funds and wait to be deposited for when you deposit it to the bank. Again, doesn't really matter what system you use, that's how it should work. Now, this is the first place that a lot of people screw up. And what they do is instead of putting the money in undeposited funds to create one large bank deposit, they go ahead and they come in and do multiple little bank deposits here. And they deposit each and every individual payment into their bank account, even though that does not align to what's physically going on in the bank account. Undeposited funds exist for the reason to be able to group all of these payments into one deposit as it's done at the bank. So instead of having 10 separate checks get put into the bank account, you have one deposit that includes those 10 checks. That way your register in QuickBooks is matching exactly to your bank register at the bank. That's a huge factor there and something that's a lot of people don't think about or don't do. What causes an issue here is then if you're using the bank feed, or even if you're not using the bank feed, you go to reconcile, you're not finding that one transaction. And so you enter that one transaction, and now you've doubled that income. You've got the income from the invoice and the payment, and then you've got the income from your bank deposit that you manually put in. So that ends up doubling the income there. Or even if it doesn't double it, you might end up not selecting every single payment going on in there, and that's a huge factor. Again, why we want to use undeposited funds is undeposited funds allows us to make sure every payment we receive is making it to the bank. If the payment doesn't make it to the bank, then we know, hey, we didn't actually receive this, so that we can go back and we delete that payment so that we keep our income and everything accurate here. And that's a big thing that a lot of people kind of screw up. And that's why they have really big sales numbers or income numbers over where they should be. Join me for a second here while we kind of take a look at what undeposited funds is and how it should work to help you out. This is only going to be a quick little crash course just because there's so much else to discuss in this video, but I do want you guys to kind of understand exactly how all this works and how the money flows here. When we are looking at accounting and everything, it all comes down to the movement of money in your chart of accounts and the movement of money between different accounts. Accounting is always going to be based off of an accrual basis of accounting at all times. It's just the easiest way for everything to work. So no matter whether you're working in cash or whether you're working in accrual, it's all going to kind of work the same way here. So whenever you send an invoice in your invoicing software, it's going to go ahead and show up down here and increasing your sales. It's going to be offset by the fact of an increase in your AR. So those two are both increasing in order to show the sales and that money that you are owed. Now, once you are paid for that, your AR will decrease and your undeposited funds or your funds to deposit would increase at that point. So it's a reduction of your AR and increase of your undeposited funds. Now, on a cash basis, you would skip the AR. Any accounting platform is still going to show it, but we would skip the AR and we would just increase sales and increase undeposited funds. Undeposited funds and funds to deposit are the area that screws so many businesses over with their income being higher than it should be, because instead of going in and creating a bank deposit, doing a journal entry, let's not do that, but that is the old way of doing it, to move the amount of money from undeposited funds that you're taking to the bank account, many people just put in a bank deposit wholly separate. That creates an issue of large amounts of either undeposited funds still existing and duplicating income, or we have an issue of deposits not matching with everything. Now, QuickBooks makes it super easy to be able to do everything here, where we can go ahead and we can come in, we can hit this plus new, and we can choose bank deposit. This is a simple way to look at your undeposited funds. With this bank deposit, it's going to show us any and all transactions that need to be deposited to the bank account. With these any and all transactions that we have here, we can go ahead and say what bank account we're going to be putting this money into, what date we're taking this money to the bank, and then select all of the payments, all of the checks, whatever it may be that are going there, so that we can group everything all together so that there's one deposit that matches what's going on in the bank, rather than multiple individual payments. This makes everything a lot cleaner, it makes matching to the bank feed a lot easier, and it also helps substantially to eliminate the risk of duplicating any type of undeposited funds or any type of income too. So it's super, super important that you use this bank deposit screen in QuickBooks so that once you receive that payment, you can record all the payments that you're taking to the bank at one time to be deposited into the bank account. Now, the other big factor that affects a lot of clients and really causes the doubling of income really results from the bank feed. QuickBooks Online and QuickBooks Desktop both offer a great feature where you can connect QuickBooks directly to your bank, where it brings in every transaction, generally speaking, from the bank register so that you can go ahead and code it and classify it. And it really helps to make the reconciliation process at the end of the month easier. You're making sure that you're putting everything in a more timely manner. It also helps you with overall, it's got some smart learning features to it to help assist you in the coding of everything here and make it all a little bit easier. However, where it really falls short is those smart learning features. If you aren't using the bank feed 100% correctly, it's going to cause issues. And like we just talked about, you've got to make sure that you're creating bank deposits in undeposited funds to make sure that you're grouping all of these checks, all of these credit cards, everything like that together into one specific area so that it matches what's going on in the bank account. But if you're not doing that, when the deposit comes through on the bank register and into the bank feed, it's not going to find any matches there. And it very well could, and typically what it does do is just put that money to sales. Now, when we go ahead and we put that money to sales, What occurs is we've already recorded that income. The invoice, the payment, that's already recording income on your books. So by putting that bank deposit to sales, we've just doubled that income. And I see it so often where auto add rules are set up where every single bank deposit goes to sales, where every single income transaction goes to sales, or even just clients in general, not even with auto add rules. They're like, oh yeah, that was sales income, add it to sales. That was sales income, add it to sales. They don't do it with everything, but anything that was sales income, they go ahead and they put to sales. The issue being with that though, is we can do that all day long, but we've got the invoice, we've got the payment already recording that income. So if we're putting that stuff to sales, we've doubled that income. It may not double all of your income, but it will double some of your income. And if you're using that auto add rule to go ahead and just auto add any deposit to sales, if you get a refund from Home Depot or from one of your supply houses, or your insurance company has an insurance payout or anything like that, that's going to sales, and that's going to further increase your sales than where they should be. So while the bank feed is a great feature, we have to be really, really, really careful with that bank feed, because if we're not careful with that bank feed, we're going to end up creating a lot of duplicates. It's super important when you are using the bank feed to make sure you create the bank deposits first. If you're using a system like House Call Pro, like Service Titan, if you're using QuickBooks Payments to receive your payments, a lot of times they're going to automatically create deposits for your credit cards or your ACH transfers. But anything coming from checks or cash or financing or anything like that, you're going to need to create yourself. If you need help doing that, we've done videos in the past with those there, so I invite you to go back and I invite you to look at that. But that is definitely something we need to make sure is being done, because by doing that deposit there, then we can go to the bank feed and we can then go ahead and say, hey, this deposit matches exactly to what hit my bank. And instead of adding it from the bank feed and duplicating that sales income, we match it from the bank feed. When we match it from the bank feed, that then connects the two transactions together so that the income from the invoice and the payment is connected to the money going to the bank account, and we don't end up with any duplicating, doubling income or anything like that. Yes, it takes more time. Absolutely. I'm sorry. Accounting is not something where you snap your fingers and you're done with it. Accounting takes time, accounting takes effort, and accounting takes a lot of checks and balances. If you are letting a system like QuickBooks run itself and you are letting that system go ahead and use AI and learning and everything like that to go ahead and just do your books for you, you will have errors. And generally, those errors will be fairly substantial. We've run into it time and time again, and it's not just with QuickBooks. Sage has a program out there like that. Xero has a program out there like it. There's so many different systems out there that do this same thing. And we've even on our end tried to develop an AI system to help us with classifying transactions for clients. And it does not have the same accuracy that any other client or doing it manually and cross-checking everything does. If you are in business, you are going to be spending 1, 2, 3 hours a week that you're going to have to be at minimum doing accounting and working on the books for your business. And that's for smaller businesses. If you've got a larger business, if you're trying to keep up with AP, if you're trying to keep up with everything else here, it's going to be substantially higher. So it's super, super important to keep all of that in mind. The bank feed here, as we're seeing, is going to be kind of the biggest enemy that you have. While it can be a great assistant, while it can be a great tool to use, it is just that, an assistant. It is not designed to do it for you. We can see right here that I've got this income coming in from February 28th, receiving $1,000, and the bank feed is saying that, hey, this is income services. Now, while that's probably true, it probably is service income, and I could record it there. If I recorded the invoice and I recorded the payment of this invoice already, if I went ahead and added this here, it's going to duplicate my income. Whereas if I went ahead and made sure that I came to the bank deposit screen like we talked about, found the one check or the multiple checks that are associated with this bank deposit, go ahead and deposit it on 228 and make sure that I then come back here and match, it's going to work a lot easier. The issue with this bank deposit screen is really the smart learning and the AI learning. If it doesn't find a match, it's going to make a suggestion. It's trying to help you do everything easier. But that smart learning and that AI learning, it's not going to know, oh, wait, hey, we've got these checks over here. We've got this income over here that we really should check against. And it's going to say, well, last time you put this to sales or services, so this time we should be putting it to sales, and so on and so forth. The issue with that, though, is if we keep doing that over and over and over again, we're going to just continue increasing and doubling and tripling our income time and time again. The other issue that we run into is this is looking in a very specific period. It's looking for about 30 days prior to this transaction hitting your bank account and about 60 to 90 days after it hits your bank account. So if this is somewhat of a poor example, but it's also a great example. If I was going back and I was doing my books for 2023 right now, almost 2 years later, let's be honest, then it's not going to show anything if I don't make sure that I'm changing these dates to match or be relatively close in line. So even though I might have this transaction entered, and I entered it for December of 23, and it is in 23, it's perfectly acceptable. My end of year P&L, my end of year balance sheet, those will all be correct. The bank feed is not going to find that match because it's not within that date strata that it is looking for there. So it's super, super, super important that we keep an eye out for this and we work with all of this here to ensure that we have an accurate set of books and an accurate set of numbers. Thank you guys for joining me today. I hope this was informative. If it was, I invite you to please like, subscribe, share this video, share it with people who could use it. Help spread the word. Leave a comment, ask questions if you do. It really helps with getting the videos out there to the people that really need it. I invite you to continue watching our videos, and if you need help or if you've run into this issue and you have questions that you want to get answered or need help getting it cleaned up, please feel free to reach out to us here at waterfordbusiness.com or give us a call at 864-351-0852. Until next week, have a wonderful day.